Been warning the public about the private credit markets. Now I want to make this very simple to understand. From 2006 to 2008, the economy in America went through a big housing collapse, right? After that, based on horrible regulation of banks and unregulated bank lending, basically, subprime mortgage, they cracked down on banks, right, and lending practices. So what happened was a whole new market emerged called private credit, kind of like subprime mortgage, but we developed a private credit market. Let me explain. So if I was a tech company that was higher risk and I went to a traditional financial firm or a traditional bank, they would decline me. I could go to a private credit market or a non-bank financial institution, and they would lend to me at maybe a higher interest rate because I was higher risk, because they were getting access to very cheap money. So there's a lot of companies that were developed through cheap money, private credit. Now that interest rates went up in 2022 and have stayed steady and may be increasing on the back end of the year, you're starting to see the crack in the private credit market. So how does that affect you as an investor? So a lot of the companies have been developed off private credit. So there's no more cheap money anymore. So as interest rates go up, that means the cost of credit goes up. As inflation goes up, that means the cost of goods and services go up. So as Warren Buffett says, when the tide goes out, you're going to see who has swim trunks on. We're about to see who has swim trunks on and who is all based on fugazi, fake money, cheap credit. Now the credit's getting expensive. We're going to see which companies, which people that borrowed at very low interest rates have true ecosystems. So this is the stuff we warn you about, the private credit markets. We got the 5 big forces. We got inflation. We got devaluation of our currency. We got an overvalued stock market. Okay. We have social geopolitical risk. And then we have a credit crisis in America. And now we have the private credit markets cracking behind the scenes. You wonder why in 2025, the credit executive order pull your 401ks into private credit and private equity. Well, there you go. They need liquidity. 49 trillion in the stock 401ks pulled up into the stock market. You're the exit liquidity. Warriors, let's get your shit together. Know the game, baby.